Good morning, your financial independence investors. Welcome back to another video where we always try to grow your financial independence. So today I got a video going over 3 stocks that I'm looking at as the market, even though Friday it went up, as the market continues to downturn. I see it downturning. I see this week or maybe the week after that being one of the worst weeks, and then we'll find a bottom somewhere throughout there. So I think there's still going to be a little bit of pain still left in the market before a lot of these hedge fund managers come back in, because you got to think we're still in tax season right now. So a lot of these hedge funds that made short-term profits, they're having to pay a lot of tax right now. But if you want daily stock market news every single day the market's open, make sure you subscribe, like, hit the bell notification, and then throw a comment down below so we can chat down there. Without further ado, let's get into these 3 stocks. So the first stock that we're looking at is called Trade Desk. TTD is the ticker symbol. They basically, anything that sells advertisements, whether that's like TV or on the internet. So some recent news about the company. The Trade Desk announced that a 10-for-1 stock split. So if you own 1 share right now, it's going to be 10 times less valuable, but you're going to have 10 shares instead of that 1 share. It doesn't affect the market cap or anything like that. It basically just changes the numbers around. That's all it does, which is actually a good thing. It can be a catalyst for a stock for smaller investors. They can actually buy shares now. People that maybe don't have $400, $500, $600 a share to buy, now they can buy it for $40, $50, $60 a share. So you'll see this on the trading change on June 16th of 2021. Trading will begin as a stock split adjusted basis on June 17th. So on June 17th, you're going to see all the numbers turn around on this stock. So some of the highlights that I do want to point out is strong customer retention. They have a 95% customer retention rate, and that's the previous 7 years. So long term, they keep 95% of their customers, which is very, very good. That's like out of this world numbers. Another thing is they're expanding partnerships. They're going to start working with Walmart. In Q1, the Trade Desk partnered with Walmart to launch new DSP based on the Trade Desk platform that will provide advertisements with access to unique Walmart shopper data and sale metrics data in the self-serve platform. So for their guidance in the second quarter of 2021, we're going to be looking at a revenue range of $259 million to $262 million, adjusted EBITDA of at least $84 million. So for the second stock that we're going to be looking at is Airbnb. We're now in the IPO prices, which is really good, where the company, it initially came out at like $68 a share, I think, but it closed that day of like around $140. So you're going to get this company around, I think this is around a $90 to $100 billion market cap, which is big, but this is a long-term winner in my opinion. So the shares are down about 34% in the last 3 months, and that equates to about $73.94 per share. Some of the recent news I want to point out on this stock: in Q1 of 2021, revenue increased by 5% year over year. This exceeds Q1 of 2019 levels pre-pandemic. So they're already exceeding their pre-pandemic. They've already recovered those losses. They're moving on to higher ground now. Another thing that they pointed out is people are ready to travel. So as vaccines are more widely available and restrictions ease, there are signs that people are ready and willing to travel. For example, we saw a sharp increase in bookings in the UK immediately after British Prime Minister announced plans to exit the lockdown in February. And for guests ages 60 and above, who are amongst the first groups to benefit from this vaccine rollout. So searches on their platform for summer has increased more than 60% between February and March of 2021. And for the third stock, I remember talking about this in past videos, and their earnings was catastrophic. But at the same time, it's kind of like Lemonade's earnings. It's kind of out of their control. It's the bigger scope of things that just impacted the business. So for this third stock is Array Technologies. The ticker symbol is ARRY, and they're down 51.69 since the company went public. So that equates to about $15.25 a share. So they're over half down from if you had bought into this company when it went IPO. And we've seen highs about $50 per share. So they're around a $3 billion market cap, give or take like 100, 200 million. So they're somewhere around that range. So you're going to be getting these shares at $14.25, and this was close of Friday. So to get into why this stock fell so much, Array Technology reports financial results for the first quarter of 2021. So for the first quarter, they had revenue of $249.9 million, net income of $2.9 million, and this is a basic and diluted earnings per share of 2 cents, which if you look back on this company a year ago when they're making around like 60-cent EPS, that looks pretty bad, especially if you have a long-term bullish thesis on this company. A lot of these investors are like seeing this like, oh, maybe this is not coming, to fruition of what I thought it would be. Adjusted EBITDA of $34.9 million, adjusted basic and diluted net income per share of 19 cents. So that looks a little bit better. Analysts were expecting, I think, 20 cents, so they only missed by 1 cent of EPS, which is a slight miss, but we'll get into some of the factors of why this stock fell so much. So this came from Mr. Frasero. Demand for our product remains strong, with quoting activity at the highest levels we've saw in our entire history. We believe the superior value of our tracking system delivers can be recognized by a growing number of EPCs, developers, and assisted owners, and is underscored by this up to 4 gigawatt award that we recently received from Primaris, which is one of the largest EPCs in the United States. So at the same time, we are seeing record demand for solar. Our industry is contending with increases in steel and shipping costs that are unprecedented, both in the magnitude and the rate of change from Q1 of 2020 to Q1 of 2021. Spot prices of hot rolled coil steel, which is the primary raw product that goes into making their tracking systems, has more than doubled, and having continued to increase in the second quarter, with spot prices of up to 10% since April 1st, still remains almost half of our cost of goods sold, and we do not hold large amounts of steel inventory. So as these steel prices, they may continue to go up, but at some point they're going to flatten off. If you look at any commodities, they're going to start going back down. But being that they don't have a lot of steel reserves, they're still having to buy steel at these prices we're seeing today. Whereas if they had a very large steel reserve, which I think they'll start to do because they realize how big this impacts this business, so they'll start to acquire a lot of steel in bulk, maybe have it in warehouses ready to go. That way they don't have to start buying steel at prices that they're seeing today. So at this moment, I'm definitely not buying into this stock with the prices being where they're right now. If they go below 10 though, it starts to get at a very attractive valuation, especially if you're thinking about long-term. Steel prices are going to go down eventually, in my opinion. I'm not a financial advisor. And with that, how many clients that they're starting to get and how many new contracts they're signing. I mean, a 4 gigawatt award for another publicly traded company, that's huge. That's going to spread word everywhere. So they're going to have a lot of revenue coming in, but their cost of revenue, their cost of these goods is going to, they may go unprofitable until steel prices come back down. But for the long term, even at these prices now, I think this is a long-term win, especially if you think solar and, renewable resources that create energy for all of us. If you're expecting that market to continue to grow, whether you're talking about solar panels or renewable natural gas or anything like that, this company it's bound to benefit in the long term, especially with how many tax incentives that are going to get rolled out by the government. So with this, your financial independence investors, I hope this gave a good overview of 3 stocks I'm looking at heavy that are not in my portfolio already. And I hope you are having a great Monday. Hope to see you all in the next video.